Well, it gives me great pleasure now to bring on board Shyam Srinivasan to understand how things have transpired for Federal Bank for the quarter gone by. What is the way forward, and how will FY25 be different from FY24? Now, Shyam, good afternoon. Thank you for joining us. Let's first understand the big picture here. And the big picture here is that Federal Bank continues its growth momentum. It is growing at a run rate which is higher than the industry average. And the CASA numbers, I won't say enviable, but they are rock solid.
Yeah, Nikunj, the first and I think the key point for quarter three, you may have observed, the first time ever the bank hit the 4-digit quarterly profit number. We crossed 1,000 crores of net profit in Q3. Sequentially, it's been 854 first quarter, 954 second, and this quarter was a record number of 1,007. And this on the back of a fairly strong FY23. 24 looks like on course on all the key metrics the bank has been seeking to work on. You know, it is a tight market for all players. We've held out quite well. And I do believe this momentum of ROA and ROE expansion should continue as we look into either the last quarter of this financial year and or the next financial year. The dynamics are quite, and I think the bank is fluid enough to readjust to market realities. So on balance, I think we are on course to delivering what we set out to do a few years ago, sequentially improve our ROA, an annual improvement of about 10 basis points every year. I think we are on course for that.
Shyam, we always look at the aggregate book, and with Federal Bank, we've never discussed this point. So let's take this opportunity to understand that the growth in Federal Bank, how much is coming from your hometown Kerala, how much is coming from South, and how much is coming from new areas? Because for me, that's a real parameter of growth, that you are no longer a old private South-based franchise. You got your wings which are now spreading.
No, thanks, Nikunj. I think I do want to believe we shed that tag of an old generation bank a long while back. But that said, we have a very marked presence for the reasons we were founded in Kerala. Our deposit franchise is rich here. Our credit book over the last many years, and in particular the more recent years, has been substantially growing across the country, very diversified. Our branch network today, as I speak to you, is about 1,414 branches, and out of which 820 branches are peppered across the different parts of the country. About 590 are in Kerala. Our business origination has been what 75-80% of our business comes from all across India, other than our home market. So I think this tag of old or regional has been long shed, and I hope that's visible in all our outcomes. We set out to be the most admired bank many years ago, and I do want to believe that that momentum is sort of relentlessly progressing. Our digital capabilities match the best in the market, sometimes even ahead. And in some ways, these are playing out in all the initiatives of the bank, be it new offerings, new geographies, new products, and most importantly, growth being evenly spread across many of our geographies. There are some core strengths which we should preserve. We are a magnet for non-resident Indians to bank in India. We bring in about 20% of the India remittances that come into India. Initially, it was just the Middle East, Kerala. Now it's non-Middle East, non-Kerala, Middle East, non-Kerala, all quadrants working in favor, and we think we are getting a good traction on that. So on balance, the bank is now sort of as widespread, as prominent as we would like it to be across many geographies. Yes, Maharashtra, Tamil Nadu, Karnataka, parts of Gujarat, and parts of the north, we have much higher presence compared to our past, and those are showing through in the numbers.
Shyam, when I spoke to the SBI chairman, he gave us a very simple thumb rule that at his size, his growth would be nominal GDP plus 2%. If you have to use the same thumb rule to understand your growth rate for FY 25, can I say that it will be nominal GDP plus 5 to 6% at least?
Yeah, we could safely say that, Nikunj. I think if you see, barring the COVID period, and even if you take that into our calculation, the CAGR for federal has been well north of 15 to 16% across an 8-year period. To back COVID out, it's probably 18 odd percent. And if you look at the industry, it's grown in the 12, 13%. So we are at what, 500 basis points to 600 basis points higher than the industry growth, which in some sense is the number that you are also pointing out to be. And I do think that momentum is there. If you take the last 6 quarters, it's been 18% plus.
Shyam, so let's look at a 20% hurdle. If you grow at 20%, which means rule of 72, I'm breaking it just for the benefit of our US simplification. Rule of 72, folks, is that you divide the growth rate of with the number of 72, which means every 3.5 years you will double. Is that a very reasonable assumption that every 3 to 3.5 years, bare minimum, federal bank would double?
Yeah, you sort of hit the nail, rule of 72. We keep saying if you grow at 18 odd percent, every 4 years, the book should double. And if you cut back over the last, say we were today, as we exited December 23, the overall book of the bank is about 4.4 lakh crores. And we were under 2.5 lakh crores exactly about 39, 40 months back. So that should be extrapolated. Yeah, there will be seasonality in, there is caution to banks are being advised to be more thoughtful about credit expansion when the weather is sort of rough in some parts. So anything to expect 16 to 20% growth through this period is very possible. So to expect federal to be doubling over the next 4 years, I think is quite on course. It's on almost exactly what our internal aspirations and our commitment to our board and our ourselves is. So doubling the bank over the next 4 years should be very possible. And importantly, it's not just doubling. I think it's profitable doubling.
4 or 3, because that 1 year from a stock market standpoint matters. Because you are growing at a rate in which, technically speaking, 3 years you should double. So if I say 4, that's the reasonable assumption. If I say 3, will that be an optimistic assumption?
I would only track one line, and that is that certainly we would like it to be 3 and a little above. But I think given the caution that's being exercised all across, we have to be a little thoughtful because I think the markets are getting tougher in the deposit space. So, through that period. But I think if you take a longer horizon, 3.5, 4 years, we are very much on course. But I'll add quickly, Nikunj, the priority is to make sure that this is all a sort of really profitable growth. And that's what makes us very happy. If you take the last 4 years or, any slice of time, I think when we were at a 0.7% ROA, we had said we will double it in a 5-year period. I'm delighted that as we speak today, we are bang on that. And I think at 1.4% ROA, we start competing with amongst the top 5-6 banks in terms of sustainable. And I think on the margin, our rate of growth has been more credible than many others.
Will you stop at 1.5? Is that the maximum efficiency you can squeeze, or 1.5 could eventually head towards 2?
I often say that let's get to 1.5 and we'll tell you why. I think, the endless arbitrage that some players will have to be in the 2 spaces slowly getting to be squeezed out, Nikunj. I think it's 1.8 would be the top of class, and 1.5, 1.6 will be the next breed. We seek to be in that 1.5, 1.6 shortly, and then work our way up to the 1.8. But in that zone, I think the trajectory is important. We are on course. We are at about closer to 1.4, 1.39 this quarter, and on course to keeping that going.
But is looking at understanding the federal bank. I'm going to address this on behalf of, let's say, our viewers and for investors. I have maintained a view that, the stock is getting a stepmotherly treatment. For a franchise which makes 1,000 crores of profit, and with this kind of an ROA, should have a better price to book. Now, that is a function of perception, and perception is a function of stability and continuity. So can I say that on the NPA front, allow me to make the structure for federal bank. We are looking at bank doubling in 3 to 3.5 years, ROA between 1.5 to about 1.8%, and NPAs which would be definitely in and around 0.5%. Can I say that that is the template for federal bank for 3 years? I'm making life miserable for a lot of brokerages who perhaps have less hard work to do. But is that the fair assessment?
I think, yeah, your assessment on all the direction vectors are perfectly bang on. We are renowned for our quality of portfolio, and I'm happy through this period also our book is holding out quite well. Our gross and net have been sequentially improving, year on year improving. Net, our credit costs are enviably low. It's at about 30 basis points. We seek to keep that as our sort of benchmark number. At 30, 35 basis points, we would probably be amongst the best in terms of credit costs. So if our trajectory in the high teens credit growth, credit costs at about 30 basis points through the cycle, I believe 1.5 ROA is something that is on course. And with that, I think some more initiatives or higher margin businesses that we're launching should take us to the next wave.
In general, when interest rates are peaking out, I was talking to one of your peer bankers and he said, CASA is the new gold, oil, or Bitcoin, whatever you want to call, but that is the importance of good liability franchise. Don't you think it will be a struggle to maintain NIMs around 3%?
Around 3% won't be a problem. It's in the mid sort of 325 to 330 and a little more is where the near-term challenge is. But as you notice, our book is getting pivoted to some of the higher yield businesses, and we haven't had large share of that. I do think over the next 2 years, given the momentum we are seeing in these businesses, the higher yield businesses will start getting a higher share of our overall business. We have a sort of risk appetite framework within which is what we are playing. I think around where we are right now, 3.2, 3.25 in a steady state is possible. Yes, there will be some periods where interest rates start trending down, so some books get readjusted, recorrected. But I think through the cycle, 325 is where we think we can. I wouldn't go as low as 3 and in the near term.
So can I say that for next 3 years, as of now, there is no fog in the windscreen? This famous line from Mr. Narayan Murthy. There is no fog on the windscreen. All the fog is in Delhi. There is no fog when it comes to Federal Bank's 3-year target.
I think our wipers are in a good drive through fog without accidents.
Okay. Now allow me to be curious. The fact that you would be completing almost 15 years in September. You built a franchise which is built to last. And I'm sure as the CEO, you are thinking what is next for Federal Bank. And without me prompting, I'm sure the plan is already in place. Markets are curious to know what's next for Federal Bank. I mean, you've been the face, you've been the change agent there, you've been the leader, you've glued a lot of things. What's next now? Is that a fair assessment if somebody is curious?
I think we've been candid when the regulators advised us to execute our succession plan. The board put out the message. There is a process underway, and well before the deadline, we will share the names with the regulator for them to approve and sort of appoint. But I added only a few minutes back, and I'm glad you picked it up. We are built to last. I think we've had for about a year plus been mentioning we have a very strong succession internally. For choice, the board will look from outside as well. And we bat quite deep. We have a good team across the spectrum. And through last 4-5 years, one of the wise things we have done is we've created a senior management team which is spread across different geographies and not sort of polarized in one location, whether it's Mumbai, Kochi, wherever. We have Mumbai, Kochi, Delhi, Chennai. All our seniors are peppered across these places. We represent the geographies we are present quite nicely. So I think depth in the senior team, unarguably there. Board continuity is very strong. And I genuinely want to believe we've built something that is transcending individuals and across time. So my conviction is that FY 25-26 will be even better. Yes, I've had the opportunity to be around for a long while, but I'm sure it'll be only better.
Well, you've given this launchpad, Shyam. I think that's incredible. I've had the pleasure of tracking your journey at Standard Chartered and now with Federal Bank. So it's quite incredible the way you've cemented a lot of processes into place. My final question is that I'm going to pick it up from your answer that you are open to an external candidate also. Now that leads to speculation, but also excitement. Speculation for shareholders and excitement for press.
Well, the process is on. All I can say is that the board is running a very elaborate search process. It's just commissioning. Like I always said, there are two very prominent individuals in the team who are exceptional caliber, but the board for choice will look around. Hopefully in the next 2 months or so, there will be a good slate to choose from.
You are confirming to us that there is a probability and a possibility, and you're open to the fact that there could be an external candidate.
Yeah, all I can say is that the board is very much in the process of identifying the most suitable for the job. I also add that we have very capable internal. So, I think as they say, the best man or woman will get the job.
If
The
I have,
good thing is the job is attractive enough for very, very talented internal, external to want it. We couldn't say that a few years back.
no, I mean, I like we've been discussing, sir. I mean, you look at Federal Bank, 1,000 crore, and if you assume that is the new normal, then we are looking at perhaps Federal Bank becoming one of the most profitable bank outside Nifty 50. So, in my assessment, if I say that Federal Bank is on course to perhaps become the most profitable bank outside Nifty 50, I think I would be correct. What do you think? I will be wrong. I'll be correct.
Two things. You will be right, and I wish we enter the Nifty.
So just to wrap it up with one final point, FI post COVID it was about survival. Banks had to survive. Then it was revival. CASA started coming back. Ratio started improving. Can I say that now it's the time of flourishing for Federal Bank? Next 3 years we would see more earning beats and we will see more surprises.
I'll just add to your survival, revival. If there's a word called thrival, it will be that.
Also good to hear that, and good luck. And I've been told that you come to Mumbai every week now because your business has really become big in this part. So next time hopefully in our studio.
Thank you. Thank you very much.
Thank you very much. Ladies, back to you.
Absolutely. So yes, that was a very, very interesting chat that we had on Federal Bank as well. Next 3 years, we could see obviously doubling in terms of growth that is expected on that front as well. 3.5 to 4 years is what we could be expecting on that front. 1.8% ROA is what the management is highlighting as well. As of now, Federal Bank trying to make a slight bit of an uptick or a recovery, but nothing much. But yes, 1.4% downtick is what Federal Bank is at.